Up 325 odd points. Let's get in a very, very special guest now. One of the most renowned economists here in India, Samiran Chakraborty, now joins us from Citigroup. Samiran, thanks. It's been a while that we've spoken to you, and clearly, a lot has changed in the last 20 days. It's keep changing in the last 3-4 days. Firstly, how difficult it is to assess the impact of this volatile crude, various other commodities that balance sheet of India may have to face.
Thanks for having me on your show. So let me start off by saying that these are times when economists also need to be humble and accept that there are certain things which you can only do from a scenario analysis perspective. So it's possible for us to quantify a part of the uncertainty and give scenarios on what would be the impact on the economy under those scenarios. But it's very difficult to really predict on which scenario is going to play out. So one can say that if oil is at 80, then how it will look like versus if oil is at 100 or 120. But if you ask me whether oil will actually be at 80 or will be at 100, that's almost impossible to predict at this moment.
Absolutely, that goes without saying. Also, when we just talk about, the impact of oil or how investors have, reacted to oil price hike this time, do you think incrementally over years, impact of oil prices, other commodities have come down versus what it used to be earlier?
Look, the fact is that we are still importing bulk of our oil. The fact is that this is a scenario where, in an almost unprecedented fashion, a whole basket of commodities, from agricultural commodities to metals to energy, everything has gone up together because this conflict zone of Russia-Ukraine is also a major global supplier of a whole bunch of commodities. So from that perspective, when we look at the impact on India, particularly on inflation, etc., we can't just restrict ourselves to oil. It goes much beyond that. Yes, there are small areas where we can exploit the opportunity as well, like with global wheat prices increasing, is it possible for India to export more wheat? Or for that matter, in certain metals where the Russia supply could reduce and India could take up that space. But beyond that, I think we are now looking at a more broader global commodity price inflation and its impact on India beyond just simply the oil prices.
So, Samiran, on one hand, we have seen FMCG consumption names really take a hit. I mean, I know that is not your area, but can you just tell us that, when you see such sort of hyperinflation, sudden change in the disposable income that any person would have, what sort of an impact does it take on overall consumption in the economy?
So it's a very interesting situation that we are passing through, where, in my view, we are living almost in a dual economy setup, and sometimes we often refer to as a K-shaped recovery as well, where a part of the population who are probably engaged in the formal sector have got a pretty decent job and income growth. That segment is able to tolerate some part of this price increase, which is leading to companies also having some pricing power. You mentioned FMCGs. The FMCGs have been regularly taking price hikes. So while these set of consumers have the purchasing power, which is leading to the pricing power for companies, there is also the downward part of that K, the other part of the dual economy, where there is significant stress. And that's why we are seeing this very peculiar situation where inflation is elevated at a time when the output gap is negative, when your actual GDP is running much lower than where your potential GDP is. You would expect inflation to be lower. But very oddly, we are seeing both to coexist at this moment. And that poses all sorts of challenges in front of policymakers, because if you tighten too much, then you worsen this potential versus actual GDP growth differential. And if you don't tighten at all, then inflation could go up even further. So in my view, this coexistence of negative output gap and elevated inflation, particularly core inflation, is going to be one of the key challenges for the economy as we move into fiscal year 23.
Right. Just when we talk about growth rates and the preference of emerging markets and India's weightage over there, can you just tell us that India will be one of the fastest growing markets despite this overall cuts that we are seeing globally because of high commodity prices?
So when we look at fiscal year 23 growth rates, we have to be slightly cautious in interpreting the numbers. We have a view that with around $80-85 per barrel oil prices, in that scenario, India's GDP growth could be about 7.5% next year. And that 7.5% would be one of the highest in the world. But we have to also put the context here that there is significant base effect from lower growth in FY22, particularly in the first quarter of FY22 when we had the COVID situation. And that, when you strip this number off the base effect, then this 7.5% GDP growth is more like a 4.5% GDP growth, which is lower than India's potential GDP growth. So even with 7.5% GDP growth year over year, it might not feel like we are in a kind of very fast growth phase. It's a modest growth that we are going to achieve. And if global uncertainties increase, then there are downside risks to this 7.5% GDP growth as well.
Understood, Samiran. Thanks so much for taking out time for us. Always good to get perspective from you. Hope to see you much more on TV after RBI, what happens on commodity prices or whenever you change your estimates. Thank you so much.
Yeah. Thank you.
Well, when we just look at the markets, 328 points higher, 17,300, looking in strong. Small cap index up 1.2, mid cap up 1.3. Taking a break. Stay tuned.